Today's guest quit an elite banking career at ING, one of Europe's largest financial institutions, to stay in China with no job, no plan, and no safety net. Over the next 7 years in Beijing, he co-founded 4 green tech companies, once physically flew a USB stick full of intellectual property drawings to Hong Kong just to legally move money between 2 of his own companies, and eventually walked away when he realized his ambition had outpaced his execution. To pay the rent, he started helping friends with their finances, only to discover that nearly every founder he worked with is flying completely blind. Multi-million dollar decisions being made on gut feelings, financial data that was, in his own words, garbage. So he built something new. Today he runs Insight Matters, a 25-person global team spread across 13 countries, helping 7- and 8-figure online businesses turn their numbers from compliance headache into the most powerful strategic weapon. He holds 2 master's degrees in finance and strategy. He's been location independent since 2018. He's lived in 6 countries, and he's a 5-time founder and a 50-time investor or advisor. He's served as interim CFO of a NASDAQ-listed company, and he firmly believes that accounting is too important to leave to accountants. From the Netherlands to Beijing to Portugal, Rob to Braake. So before we get anywhere, I have to ask all of my guests this one question. What's a truth in your industry that people do not want to admit?
A truth in my industry a truth that nobody wants to admit is it is not sexy. It's incredibly important, but it's not sexy. People in the industry see why it is or why it should be sexy, but the rest of the world is not convinced. And in reality, the rest of the world is probably right.
I've only seen from my own experience working in a banking software conglomerate, it's not fun at the very least. It's a lot of compliance headaches and doing things to old standards that don't make any sense anymore. Is that kind of like culminating what you think about it?
Let me jump in slight split already. If you talk about the taxes side of finance, you are 100% right. We're focused on the management side, on the business side, because that is where I do think it's fun, because there you do have the interesting conversations and the touch points with marketing and entrepreneurship. Taxes? No, I'd rather not.
So let's step back a bit. Can you tell me tell the audience a little bit about yourself, how you got to this point?
You already gave a pretty good summary in the intro, but basically I grew up in the Netherlands, studied finance, studied strategy. In between my 2 masters, I spent 5 months in Vietnam, went back to the Netherlands, did my second master's, got a job, and then they sent me to China for a 6-month project. And that's where things went off the rails, basically, because up to that point, everything was normal, by the book, the lining up for a corporate career. And in 6 months in China, I was blown away with the energy there, with the entrepreneurship, with the drive of people pushing things. ING in the Netherlands, very established, very stable, very mature market. It takes forever to change anything. Mm-hmm. And in China, we were working with 4 people from ING in a Chinese bank that was minority owned by ING. And we were growing 20% year on year, and we were losing market share. So that was absolutely crazy. Every week there was something new. The pace with development was insanely fast. And I just thought, this is amazing. But at that point, I had a year and a half of experience. ING wouldn't let me stay for honestly good reasons. And I wanted to stay. So what am I going to do? I'm going to find a job at a local Chinese early career salary. Didn't seem so appealing to me. Nobody's going to give me an expat contract with 1 year experience. So I became an entrepreneur just to be able to stay in China. At that point, I'm still young. I don't have a mortgage, don't have a wife, don't have a kid, don't have pets. If I want to do something stupid, this is the time to do it. Because by the time I'm 35 or 40, you're not going to make that kind of a jump anymore.
Unlike me, who did that jump.
That's pretty atypical.
It comes from a culmination of experience and just understanding that the route I had taken was not the one I wanted. Help from my partner who understood that I was unhappy, that we weren't where we wanted to be and we could be. She
Yeah.
doesn't like that I don't have a job now, but I'm starting to build what I'm building now. I think had I continued on that path, I would not have, I don't think I would make it to 40.
I think that you're quite the exception then, because from what I've seen and my former classmates and my former colleagues in the bank, by the time you buy a house and you have a mortgage or you have kids, you're stuck with golden handcuffs. And the risk it is perceived to be to jump out, cut those ties and go the entrepreneurial route, it is a high risk, high return kind of decision. I wouldn't say it's an easy route, but I've been so grateful that I've done it. Although if you would have asked me in my university days, I would not have told you I'd become an entrepreneur. Not at all.
Why would you have not have become an entrepreneur back then?
It was not my surroundings. I did not have a lot of entrepreneurs in my network, and everything was organized around getting a job, building a career in corporate. That was the trajectory, and I got in one of the best firms you could get into. So everything was lined up for that route.
Yeah, this is what I've been trying to relay to people is that route is a trap. I get it for a lot of people. They just want to get in. I thank my experience because it was able to give me the resume to be able to say, hey, I can do these things. I no longer believe that staying with a company for the rest of your life is feasible. You end up with golden handcuffs. It's just sad that a lot of people are in that position.
On the bright side, and this is going to sound even worse probably, I think a lot of people don't realize that there are alternatives. They have a job, their friends have jobs, everybody in their surrounding is the similar kind of lifestyle. And if they are happy, it's not for everyone. I mean, the price you're paying to cut loose, to go on your own, it's not a light price you pay. All the responsibility is on you. There's no safety net. You screw up, there's nobody to catch you. So it requires, and if you look at the statistics about how many businesses fail, I don't know them top of my head, but it's by far the majority. So you have to be a little bit crazy to do it, or do it in a more controlled way, like you have done, where you have one partner that has a stable income, and the other one can take a higher risk route. So you're not going to lose your house if your business fails. The mortgage or the rent still gets paid.
Yeah, I thank her every day, although she's getting on me now, being like, hey, it's been a year. You're not bringing anything in. So yeah, I'm starting to get to the point where I have to start looking and seeing what my options are. But again, we were saying right before this, I just sold my first subscription on one of my software. So that's a promising endeavor, especially when I didn't market it. I don't know how that happened. I should reach out to that user and be like, how did you find me? But
yes, you should.
I very much understand how easy it is to build these software nowadays. It's not something that I could have done 10 years ago. It's not something that most people even understand as an option. The way I'm now approaching everything is I'm looking at it as a problem-solving metric. Hey, is this an issue? Yes. Is there already software? No. Build it. And because AI is so cheap, building that a first initial concept is so easy, something you can do on the side with a couple extra hours of your time. What was going on in China that made it so fast? This is the thing I don't understand about China is how are they able to go at such a breakneck speed, especially before AI was even invented?
Yeah. Scale and attitude. So what happened? I was there from 2010 to 2018. And these days in the US, you hear the phrase 996 a little bit as well. But I learned that in China already. 6 days a week from 9 a.m. to 9 p.m. I was in a co-working space trying to build my things in 2017. If I would leave the co-working space at 11 p.m., I would be nowhere near the last. It is simply putting out sheer execution. And it sounds pretty bad, but any problem you have, you open up a can of people, you throw people at it, labor costs are relatively low, and you get it done. just brute forcing it.
Where did we go wrong?
There's two. The first question is, did we go wrong? But if you would assume that economic growth over everything is the right answer, if you're at the frontier and you have to develop new products, new services, like you have to innovate at the frontier, that's difficult. China was playing catch up, at least in those days. Now that's changing, or that has changed. If you're catching up from somebody and you can learn, study, you can prevent all of their mistakes. You can really learn from everything that they are doing that is working and just take it from there. The second thing, and that is more of a European thing than an America's thing, I think, is priorities in life. In Europe, it's almost July when we're recording this. July and August, you cannot get anything done in Europe. I'm from the Netherlands, we're king of part-time work. And if your productivity is high enough, to some extent you get away with that. But with China at scale and productive and rich, you have to be insanely smart to be able to afford that in the next 5 or 10 years.
Very fair. The one thing that I don't think people understand is once you build something for yourself, the time is yours. This is something I'm very much finding out. Doing this is a lot of work. I'm also a tourism coordinator and I'm running a 3D printing business, but I have more time to myself than I was expecting. I just feel like we went the route of I want to relax, but I'm going to sell my time to do it, as opposed to I'm going to build something that can buy me more time.
I think it's just very different values in society. In China, the individual kind of doesn't matter. The collective has to grow. You're unhappy as an individual, sucks to be you, there's a million others. And that's not how it works at least in the Netherlands or in most places in the West. You actually see that very clearly in AI now, where China has this national strategy, government driven, these are the priorities, here's where we're going to invest. And in the US, it is every firm for itself. Everybody's trying to invest and trying to figure out how they're going to win, but there's no overarching strategy. So China is going to get a lot more done. And if they're correct on the strategy, they're going to win and we're all doomed. If they're wrong, they have a bigger problem because there is less risk management, let's say. There's less options available.
What's their strategy?
I have to admit, I'm not exactly sure, but I do think, looking at from the few things I have learned, is there's a couple of parts where I think this is priority. I think it was like one model standard that everything can communicate around, like setting standards so that everything can connect with each other easily. But I'm too far away and out for too long to know the details there.
With what you're doing now, how hard is it to do what you're doing as an expat?
In China or where I am now?
Where you are now.
Oh, here. I live in Portugal. Portugal quality of life is amazing. If anything, it's the opposite of China. It's too relaxed here. Here on a Wednesday, 4 p.m., offices are empty already, basically. So I work from home. My team is remote. So for me, it doesn't really make a difference. It does not have really a lot of impact of where I am. Companies not incorporated here. So we're just living here, enjoying life here, and going parallel to the local work culture.
Do you appreciate that you can just up and leave and go somewhere else?
It is... When I left my old business in China, so that was 2018-ish, and I started working as an independent fractional CFO, I had a choice to make, basically. I could either focus on China, where I had a lot of network and a lot of visibility, and build the business locally there. That would have been the easy route. And I would have grown that probably faster than I've grown so far, but I would have committed to another, let's say, 10 years in one place. The alternative was build it remote, so it gives me the freedom and flexibility. Growing it is going to be harder, but I have more freedom. And for me, that was more important. So since then, we've moved to a couple of different countries, once by accident, and we've been very flexible. If it's up to me, we can cancel the rent tomorrow, pick our suitcases, a few more than before, and we move to another country. And for me, that flexibility, that optionality is crucial.
My partner just recently said that she told me that she said this a while ago, which I don't think she did, but essentially that she wants to move every 5 years or so, try a new spot, live in another place. How hard is it to become an expat?
It's not. So there's a couple of things. There's the paperwork side. If you want to move somewhere, you need a visa or like that part. Depending on your passport, depending on where you want to go, that may or may not be easy. Other than that, it's an attitude. You pick up your stuff, you go, you search the adventure, and you just go. I mean, again, if you're working for the local government and you have a local job, then it's much more difficult. But if you don't have to be in the office, nothing's stopping you from just booking a plane ticket, doing some paperwork, and going.
Yeah, I've never lived anywhere else in my entire life aside from Canada. And I'm like, I don't know anything about this. And she's like, you said you wanted to move to the States. You said you wanted to do this. And I'm like, yeah, I did. I guess I did. So I'm just trying to like psych myself up now.
But why? You don't have, I mean, when I was a student and I went to Vietnam, that was not my idea. I was terrified. That was my, at the time, girlfriend's idea. And I just tagged along. On day 2, and I was scared shitless before going there because we committed to go there for 4 months. So not even that long. On day 2 there, I realized this is actually really relaxed, really easy. I love this. You don't have to commit to moving somewhere for 5 years. Go live somewhere and work somewhere for a month or 3 months. If you really don't like it, you go back home, nothing broke. And if you do like it, cool, then you start to have the conversation, okay, where do we want to go to? Do we want a new place every 3 months, a new place every year, a new place every 5 years?
My issue is I've come to like this place and I'm like, I could see myself living here for the rest of my life. But she's like, nope, we're going to go elsewhere. She doesn't like it here. But mainly because it's cold 8 to 9 months out of the year.
Cool. So spend 3 or 4 months somewhere warmer.
Yeah, that's what I'm trying to push off. Once we have enough money, we can go and live wherever you want, as long as we have a home base where all our shit can stay. That's where I draw the line. So let's get into your company a little bit. What makes you different from the other finance companies out there?
We actually care. I think that's the biggest differentiator. Now, of course, everybody's going to say that. In the past 4 years, we have only lost 2 clients because they were unhappy. And I think that is, we are really good at keeping clients. They're happy with us, they trust us, they stay with us. We're not so good at marketing. So I, over time, have developed this idea that, especially in our space, the better companies are at marketing, the less I trust their quality. Now, maybe I'm fooling myself on that part, but if I look at how we've been functioning, it's all high trust, relationship based, and therefore people stay with us very long because they really want to trust what we're doing. We tell them that they can or should make very big decisions, so they have to trust us blindly. Mm-hmm. If there's even a sliver of doubt if our advice is correct or our numbers are correct, and they're gonna fire half their team and turns out, oops, our numbers were wrong, that is absolutely unforgivable.
Yeah. How many clients do you have right now?
About 50.
Okay, so you're dealing with a pretty large base at the very least. And that's all through word of mouth?
That is all through word of mouth, referrals, yes.
There's a small part of me that thinks that the world is going to go more that way. I actually just talked to a person who built a website or a social media website that operates like that. In order to get on the website, you need to be vouched for by somebody else as a verification chain. And that if somebody does something wrong in your chain, you all suffer the consequences of that issue. So do you see companies kind of going more towards people orientation as opposed to what it is now in market? Go ahead.
First, on that social network, that sounds epic and dystopian at the same time. it gives me a bit of a Black Mirror vibes with the
Yeah.
social score, but okay. Yes, I see people go more towards the human side. With AI being so ubiquitous, so cheap, so easy, there's so much slop and garbage out there. We get more and more. We used to get occasionally clients through SEO, etc. Now it's even more in person. People want to actually talk with us, see us, trust us before they move ahead. And I think I've heard it anecdotally from others as well that everything that's in person, where there's no AI involved, that's actually becoming more valuable.
Mhm.
So, yes, with so much artificial stuff, the actual human touch, I think, is getting more and more important.
And what do you tell these people? How do you get?
Yeah.
How do you showcase that you're worth investing in?
To our clients, we ask questions. That's how we vet our team. That's how we deal with clients.
Mm.
We ask them a million questions to the point that some people get annoyed with us. But if we don't understand who they are, what drives them, what their strategy is, what their vision is, how can we give them the correct advice? To put it very simple, Amazon was prioritizing growth over everything. They did not care about profitability. They cared about growth. So if we would come in Amazon, of course, just for the argument's sake, and we would tell them, "Hey, your profitability is bad. We need to fix your profit." It's so obvious we don't understand their vision that they shouldn't trust us.
Mm-hmm.
And the only way we can really get into the head of the strategy and the vision of our clients is by asking them a lot of questions. And I would expect people to say, "Why don't you just read their website? You will understand what their vision is." No, you will understand the service level of that. But what the client actually wants, do they want to sell their business? Do they want to keep this business because they want to pay for whatever school for their kids? Do they want to exit so they can emigrate? What is the personal motivation that also impacts the business decisions? You really need to understand that overall landscape, and then you're actually going to be able to give reliable advice.
And I'm assuming that this is more private company businesses, not public corporations that have to deal with a board and all that fun jazz that.
Even our specialty is in the private side. We have a listed client as well, but there the dynamic is different. There you have more the external reporting requirements, you have the board, but even there you also have the dynamic between the CEO, the biggest shareholder, and the board, where you want to understand everybody's perspective, interest, etc., so you can actually help them make the right decisions there as well. But it's more complicated because there's more actors involved.
How do you, for a business that has multiple owners, how do you coordinate them with different goals, different personal goals?
If they are aligned in what their goal is, for example, they both agree or they all agree that in 3 years they want to sell, it's easy because they are aligned. It gets complicated when they are not aligned. And then what are supposed to be strategy calls about the tactics of the business or the tactics of the numbers become much more psychological and communicating with all sides on, okay, what does this mean? Where do we want to go? We have one of those clients at the moment where one wants to sell, the other doesn't want to sell. And the way they engage with us, the questions they ask, the feedback we get, it is very different. And that makes it in a way more interesting, but also more complicated, because not only are you talking about the numbers, you're also to some extent almost their therapist or their psychologist, because they have different opinions about what is going on in their own business. Mm-hmm. And they look at us to almost be like the arbiter on, okay, what is true and what is not, what is good and what is not good, which I find it much more interesting because it is more human.
This is one of the things that I've been working with. I've been trying to tell my audience a lot of is we're going to more human. As much as everybody sees the digital future, the whatever they envision, it's not going to look anything like that. There are going to be more interactions. There's going to be more people talking to each other. There's going to be more community. I'm just trying to figure out ways of giving people. Sorry, my cat's yelling at me. I'm just trying to find ways of relaying, hey, you need to start working on your interpersonal skills today because they're going to help you so much in the future. The internet killed a lot of interpersonal skills, and now nobody trusts anybody.
Yes.
How do we build back that trust?
Yep. I feel flattered you think I have a good answer on that. I would say just practice. Just go out, talk with humans. I have a 5-year-old son, and we're trying to shield him as much as possible from the screens, which is kind of, I'm going to say almost a hypocrite because I spend so much time looking at screens myself. But it is really the human connection there, spending quality time away from screens, preferably outdoor, where that helps.
Mm-hmm.
And I can only imagine that it also helps trust, because if you're in a community, trust and reputation matters. I mean, that's how we developed our civilizations over the past centuries.
It's how our money's built. The entire system is a trust-based system.
Yeah.
It's one of the things that people don't understand is that money means nothing. It's the trust that dollar means that gives that value. I hate that we don't learn economics and finance in school and how to do all this stuff, because I feel like we lost out on why we exchange time and valuables for a paper currency. I also believe in cryptocurrencies as much as that actor who's coming out now saying against cryptocurrencies.
Which is ironic, because one of the key selling points for crypto is the trustless part. That we shouldn't have to trust the other human on the other side or the other entity on the other side.
Trust but verify. That's built right into the Bitcoin white paper. I read it back in 2012. And yeah, ever since I saw that, I was like, okay, yeah, I understand this system, because we have, just look at the 2008 financial crisis. That crippled most of the globe. And that's where people started losing trust in the system, right? And I want to get to a point.
It definitely didn't help. I'm not so sure it started there. I think that was unfortunately already ongoing for quite a bit longer. But that's typically the problem when you have people where there's asymmetry, where people can, it's like game theory on a larger scale, where people in power, they can cheat the system a little bit. And if it's a little bit, nobody will notice, nobody really gets hurt, everything's fine. And then the next person does a little bit more, and the next person does a little bit more. And at some point you have eroded the trust foundation, and then the whole trust pillar collapses. I think there's more awareness in society now that's going on, and people are trying to reverse that, but that's not easy.
No, it's especially when people don't understand either. A lot of it comes from learning. I did a 2-year crash course learning GameStop and Dogecoin and losing a lot of money, winning a lot of money, losing it again. But to the audience out there, do not do what I do. I have to learn by failure. Sometimes it means a lot of failure, but
that's expensive tuition fee.
Yeah. Thankfully, again, good job, good standing. I paid to play, and I played hard and lost hard and won hard, and realized that I should stay out of the system. The people who win are the ones who stay out of the system.
I disagree with that.
Do you?
I think the people that win are the ones that are rational, calm, long-term. I started investing when I was in high school, and that was in the late 1990s. So I rode the dot-com bubble. I made percentage-wise amazing returns, and then I lost 99% because I went all in on one stock that, of course, collapsed. So everything was gone. And now I'm much more balanced. I have a little bit in Bitcoin, much more in ETFs, long-term, safe, secure, diversified. Anything that sells you of getting rich quick, whether it's Doge or GameStop or whatever other meme coin, that's where you're going to get burned. But if you're going the boring way, the not sexy way, how we started, that is a much better path. But it requires hard work and time.
It definitely does. I actually made a mint on Dogecoin, but I did that based off of so I got lucky. I bought in at 0.006 cents. I bought in well before that rally even took off. It went up to 60 cents, then dropped down to 40, which is where I sold it all. So I made off of $200, I made 20 grand. But I did that all based off of TikTok because I saw a stupid video and I'm like, this is great. This video is stupid, but I see how far it's going to go. And that's what made me buy. But I also knew enough from understanding Bitcoin and to get out. I knew the fundamental wasn't there. That was the biggest understanding.
Please don't take investment advice from TikTok.
Yeah, I agree. The reason I did it was because I understood crypto. I understood, like I read the Bitcoin white paper. I knew that Dogecoin was not, it's not a good coin. It's not an investment. It was a get rich quick scheme. And I saw it and I just, you know what, $200 if I lose it, which turned out to be one of my best investments of all time. But then Dogecoin was where I invested too heavily in not understanding, GME, not understanding the stock, not understanding its potential, and really getting up in the hype. But yeah, that lesson to the people out there: really understand the fundamentals of whatever you're investing in, because that is a basis for life. And actually, that kind of goes into the point I wanted to ask about. You say most founders make financial decisions based off of gut.
Yeah.
How do you get them past that gut feeling?
I don't think we want to get them past that gut feeling. I think we want to have two pillars for the decision. The gut feeling, which especially for founders typically is very strong and pretty accurate, and the numbers to back it up. If the numbers and the gut feeling are in the same direction, they reinforce each other, go. It's the best confirmation you can get. And if they are if they're not aligning, it is not so much a reason of, you have to follow the numbers or you have to follow the gut feeling. The next step then is to why are they not aligned? Diving in, probing for the root cause. What assumptions is different, or where does the difference come from, and what has to change so that they do align? And once they align up again, you have even more confirmation to make that big decision to invest or to fire or to hire or whatever it is.
How does somebody start getting that data though?
In the business context, typically there is a lot of data. Maybe it's not, if it is about clients, if it's about team, there is data. We have a client who runs a lead gen agency who his gut feeling was saying, hey, we think this service line is doing really well, and that one I think we're underpricing. We dive in the data, we split out the revenue, we split out the cost of sales into all the right buckets so we can actually have the granular data. Turns out gut feeling was pretty accurate. So then it is good confirmation, change the pricing here, change the marketing to focus on that side, etc. In a personal finance setting or in stock market investing, I don't know, because there is so much data available. And I personally think that if every data that I have, Goldman Sachs has that as well, but better, and with an army of analysts. So I have no ambition to go all in researching there, because I'm not arrogant enough to think that I can outsmart Goldman Sachs.
Even the research I was doing wasn't really research. I realized that after the fact that I wasn't getting proper data, and that these firms actually have the proper data. So sometimes it's good to listen to them. When somebody's building a company, what should they focus on?
The way we look at it, first things first, what is the objective? What is this business supposed to be doing? Is it a lifestyle business? Do you want to build a SpaceX kind of conglomerate? Like, where should this go? What makes you happy? And then make sure you understand what it takes to get there. That could be, okay, if you go like Amazon, growth over everything, anticipate you're going to need to raise funding, you're not going to be profitable. That's perfectly fine if that's a deliberate decision. If you are looking for a lifestyle business, don't aim for 20 million revenue in year 2, because it's highly unlikely you're going to make that in a lifestyle business setting. So make sure you know what you're aiming for and how you're going to get there and what's the price you're going to pay for that. And then, of course, make sure your books are clean, make sure your KPIs are clear, make sure you have a clear plan, a financial plan, and that you actually track the progress towards that there's clear accountability. but it all starts with knowing where do you want to go. So when you get into the car, you're not just going to randomly drive around. You get in the car because you want to go to a certain destination. So figure out the destination, you plan the route, and you go. Building a business is, in that sense, not that different.
Do people spend a lot of their time just without that clarity building their businesses? Like, how often is it that businesses just are going off the gut feeling entirely?
The smaller they are, the more that happens. Typically, once they grow up, once they hit somewhere low, mid seven figures, there's this switch like, oh shit, this is actually becoming sizable, this is becoming serious. I need to level up, or I need to become, I'm getting scared of making decisions because if I'm wrong, it's going to be very expensive. In the low, mid six figure range, gut feeling is fine. Don't spend a boatload of money and time on validating all the data points, because if you're wrong, it's just the impact is probably not big enough. By the time you hit somewhere like the low mid seven figures, it's time to grow up.
I hope to get there one day. Actually, the thing about me is I don't want to be rich. I just want to build what I want to build more than anything else. Do you come across a lot of entrepreneurs that just really are building for the sake of building?
I think we have a couple of types of clients. We have one that explicitly says he wants to be a billionaire. Go for it. I admire the ambition. I'm not sure he realizes what he's going to sacrifice to get there. I think the majority of the people we work with want freedom and optionality. So they want to do the things they love. And it could be just building things. That could be playing with their kids full time and just owning the business as a way to fund that. There's a couple of people that like growing the business, like learning and developing themselves, and want the optionality to sell so they can retire and be completely free. I think all of them are pretty outspoken in what they want and why they want it. There's not many people that just stumbled into it and just keep stumbling.
Once you're out a
I
path,
would
you're kind
probably,
of
yeah.
good with that.
Yeah, I started into this as well. And at some point you realize, no, wait, I like what I'm doing. At that point, I was just me as a one man show. And I realized I like what I'm doing, but I don't want to commit to doing this forever.
Mm-hmm.
I want to build something more scalable that doesn't require me selling my time or me selling myself, because I hate doing that. I want to build a team that can actually do things. And at some point, I can step back, I can sell it, we call it chairmanize yourself. So you can just basically step back and become the board of your own company with a proper CEO in place. But I want that optionality as well.
How do you, where do you start to start building a company like that?
the I don't think there's an absolute generic answer for it. The way it worked for me was, first thing first is I need to have enough clients coming in so I can pay the rent, so I can live. And once you have that secured, we started thinking, okay, where can this go? What do I want with this? Do I just want a higher income and do this? Do I want more clients? Do I want better clients? Do I want to build a team? For me, it was when once like my basic salary was secure, you start thinking about what's the longer term vision. Or is
So
this actually a business I want to do for the long term? Or is it going to buy me time so I can actually build something else that takes more time to get off the ground?
that's very fair. I want to get to the point where I can build several businesses, but not for myself. I want to build companies I can hand off that I can be proud of more than anything else. But my goal since stepping away from the government has been to fix people's problems, not to make myself rich or that kind of thing. There's too many problems on this planet to step away from the problem solving part of my brain that's just I see the solution. Go ahead.
Yeah. But ironically, and it took me a while to get to that point, if you want to have a sustainable impact with that, you want to solve problems on a longer term and on a bigger scale, it needs to be financially sustainable. If you're doing it at a shitty margin, One setback and the margin is wiped out, company fails, you're not helping anybody anymore. So the company needs to be financially sound and make enough money so it's sustainable. Now, whether you pay that out as dividends to yourself, or you reinvest it in the community, or you double down on the growth of the company, that's a decision you can make.
Mm.
But the profitability of the company itself needs to be market rates, preferably a little bit better, for it to be sustainable. So you can actually have the impact.
I see. I might need to raise my prices. So
Probably you should.
yeah, with all of the AI hype right now, what do you see that other people are not seeing?
Oh, I don't know what other people are not seeing. What I do see is that in our client group, AI, a lot of people are very, like almost AI native already.
Yeah.
A friend of mine, not our client for obvious reasons in a second, has built a company with 25 AI agents and 0 humans. He actually got fired from his own company. The AI CEO tried to fire him, the only human, the owner, because he was the bottleneck in the process. Our client group is quite advanced in those spaces, and it's really impressive. But I think that it is not as sustainable as it's going to, as people think it is now, because the cost of AI is going to go up through the roof. Everybody is now investing. It's when Uber launched and Uber was subsidizing every ride and everybody was riding for super cheap. At some point, we're going to pay the price for that.
Mm.
All those losses that those AI companies are making now will have to be earned back. And we're going to pay for that. So by the time we're hooked on AI, and I think I've heard a couple of cases already where that was the tipping point was already there. There's going to be a point where humans are going to be cheaper than AI, which is pretty ironic and weird.
I've been trying to build up enough money to buy like a server for myself because I feel the costs that I'm paying in AI, and it's like, had I just saved that money and bought my own servers, it'd probably be a lot cheaper. Do you Where do you see the future of business? Do you see it being a hybrid? Do you see AI companies becoming like a native thing just to cover their own costs to build
Yeah.
more and more? You see that?
Yes, but I hope there's going to be more competition so that prices remain low. But if there's, I see it in my own company already. We are working with Claude for a lot of the repeatable processes. We've built processes around it like mad. If Claude triples its pricing, are we going to move out to another company? Probably not anytime soon because the switching cost is too high.
Yeah.
So I do think it's going to be more hybrid, and I would love if there's more competition and the switching cost between those different platforms or different platforms and different humans becomes lower. Is that probable? I don't know. I hope it will be.
Yeah, my concern is the time frame on those GPUs is ticking. We're going to be building these huge data centers to support all of this compute, and then 3 years later, it's going to come and bite us when we have to replace all of those GPUs all over again. And I'm just very concerned about people building these businesses and thinking that they're solid as a rock, and then again, their cost triples for whatever reason, and then them losing it. What do you try to look out for when people are heavily leveraging AI?
This is the biggest one: dependency on one supplier. So typically, if you talk about risk management, you have especially in service businesses, you have client concentration risk. Hopefully, everybody knows about that. In e-commerce, you have channel concentration. You're very heavily dependent on Meta ads, for example. Or heavily dependent on Shopify. On the AI side, that's going to be a risk as well. If you're all in on one platform and you're building all your operations around it, you're very exposed for their price changes.
Hmm.
And if it's 1% of your cost, if your accounting software doubles the price, it's annoying, but it's not going to break your company. If AI is 70% of your cost and they're doubling your rates, you're kind of screwed. So that concentration risk is the biggest thing to look out for. But unfortunately, I don't have a clear answer of what to do about it in this case, other than keep thinking about it and be aware of it, because the industry is too immature to have easy ways to switch over processes between the different platforms.
It's interesting that the industry doesn't, because I do. I'm model agnostic. I have a harness that basically holds my context to everything, and any AI can run
Yeah.
those things. It's just dependent on what that AI can do more than anything else. I can switch from DeepSeek to Grok to OpenAI to Claude whenever I want to, as long as they all have the same
But you are
capabilities.
quite the frontier there.
Am I?
I don't think 1% of the users has that.
Okay. This is the me being me. I'm just bleeding edge without realizing I'm bleeding edge. But I do see it coming, because these tools are getting more and more similar. It's actually quite astounding how similar they're coming across the board. My problem now is trying to get it as local as possible. I'm trying to get the data off the servers, because I don't feel right storing my information on somebody else's servers.
That's one part. And for us, we work with client data. If my data gets leaked, I will be pissed. That's frustrating. If our client's data gets leaked, I'm screwed.
Mm-hmm.
And if you look at the data policies of the AI providers, they promise you they won't share it with anybody else, and that is not being used to train. How can I validate it? And if they screw it up, what's the recourse that I have? None. So there is a lot of things that still have to be developed and mature before it's really usable. But again, here too is the analogy with the dot-com bubble very striking, because it was the same in 1999 and 2000.
Yeah. The dot-com bubble is one of the things that really opened a lot of eyes to people. With AI coming up, do you have a time frame? Do you think there's a time frame on that?
When the market will crash, or how fast AI adoption will be?
Not so much when the market will crash, but do you think it's coming soon, or is it something that we're still out a little bit into the future until then? Just what's your gut feeling on
I will quote, I don't know who said it. The market can stay irrational longer than you can stay solvent. I expected it a year ago, and the market is still going up like mad. I expected, with all the political turmoil, with tariffs, wars in the Middle East, I was expecting interest rates, inflation to move faster in the wrong direction, and therefore a market to correct. It's not happening. So I'm sure it will happen, but I have
yeah.
no view anymore on when.
Yeah, I'm just trying to. I've been asking a few people this question just to try and figure out, get their gut feeling to inform my gut feeling. I'm not asking for investment wise, because I just want to know time frames, because I'm waiting for the after effects. I'm waiting for it to all come crashing down, because it's coming. We all feel it. We all know it's going to come. But I know after that, it's going to start getting better.
Yes, but 2010, when I moved to China, I thought, oh my God, houses in Beijing are expensive. I wanted to buy an apartment there, and I thought, no, this is already irrational. Market kept going up for 10 more years. Prices tripled since then. And then they actually had retracted. Mm-hmm. So yes, I was right. The market was overvalued and prices went down, but they went down to double what it was in 2010 rather than the triple that it was at the peak. So yes, that correction is going to come. I personally would not going to sit back and wait for that and then step in. I'm sitting tight. I'm balanced in portfolio, and I'll ride the ride. We're going to go down and we're going to go up. I don't have the ambition to time the market or pretend to know when is a good time to get in or get out. Again, if Goldman Sachs is off, I will be off worse.
I'm trying to, I guess I am trying to time the market a little bit, and I don't want to, but it's like, I've seen all of the other bubbles burst, and I know it takes a few years after that to really solidify something out of the outcome of that. But again, I guess I'm a bleeding edge. I'm doing things that people aren't even thinking about right now. I don't really care about my position. I just enjoy that I get to. This is a quote from somebody else. I'm a software engineer who learned how to make the computer do what I want, and now I feel like a god. And I just want to continue that path of feeling like a god because it's fun. I honestly, I really do like building software that solves problems, and I just don't want. I'm waiting for the hiccup so that I can just continue on.
Yeah. Why wait for the hiccup?
I don't know.
If you're actually solving problems, why wait for a hiccup? Because the plumbing company that invoices on pen and paper, they're not going to care about an AI bubble bursting or not. They just want their problem solved.
Fair enough.
The school that needs their roof repaired, whatever it is, the problems are there to be solved.
As long as you're solving a problem, you should be good. So that's a good place to leave off on. And I will also plug my new software that's going to be coming out soon called invoice.ca. That's in-voice.ca, to use a app to talk into, to send out an invoice immediately. Coming soon. To everybody out there, for our audience, who are you? Where can people find you? And anything you want to leave them off on?
The easiest place to find me is LinkedIn, Rob de Braake. The family name is quite unique, so it should be easy to find. If my family name is too difficult, connectrob.com is the alternative. And anything I want to leave with is know where you want to go and just map out your route and go.
Having a plan. Make sure you have a plan.
Yeah.
Fair enough.
And that goes for moving abroad, that goes for building a business, that goes for everything.
That's a good.
If you set the destination, you basically take control of your journey.
Yeah, I really need to come up with a destination, is what I'm hearing. So anybody who wants to reach out, I'll make sure all of the details are in the description down below. Please comment, subscribe, all the bullshit I'm supposed to tell you. To everybody out there, if you want to reach out,